What's up, YouTube? It's Joe Catchpolia sitting on the couch trying to make some money investing in fractional real estate online, as usual. Today, I'm looking at a property in Louisville, Kentucky. I actually stayed there for a month or two, a couple different times, a long time ago, and I think that locals would make fun of how I say it. I feel like they say like Lowville or something. But in any case, I say Louisville, Kentucky. That's what I think. I don't know. That's enough about that. But today I'm not going to go through the full due diligence. I'm going to try to start making these videos a little bit shorter, and just try to, I will continually try to remind you of all the different things that I like to look at. Because that's what I'm really trying to do here is share, what kind of due diligence I'm doing on these properties. But I'm going to try to just pick out a couple of things that I think might trip some people up with this one, or just looked a little bit weird. And so, this is one that I thought might fit into my discounted tokens model. Where we could buy it for a discount, get together, talk the other sellers into selling it because it's one that hasn't provided any rental yield for a while. You can see since last year the price has just plummeted. Although, $28 a token is not terribly low for this platform. You can, we bought several tokens in the teens since we started doing this. Um, so I started, all the regular things, looking at prices on Zillow and Redfin. And, when I compare that to, the price of the tokens today, so, this 188 actually seems like a relatively good value, right? But when I multiplied the current price by the tokens, we're looking at 110. When you throw in fees and everything like that, you're probably closer to 120, but it's still you still have 60K spread, 65, 70 maybe. And then after fees and everything, there's some money to be made if you could sell that in the real world, although not the biggest discount out of everything I've seen. But I also was curious. This is the only one in this market, and I wanted to look at the market and see, um, is this one that maybe would be worth holding for long-term rental? Because one of the things, or a long-term investment. I looked at this chart, which is the Zillow home, housing trends for that zip code. And this is the first one I've looked at in a long time that didn't have any kind of dip at all, in the 2022, 2023 timeframe. If you've watched many of my videos, we've looked at a lot of these charts, and there's almost always a pretty significant dip here. So that made me think, hey, this is a market that's doing pretty well. 6% appreciation over the last year seems really strong. And so maybe there's something to this one, right? Maybe this market would be one that I'd want to hold long term. So I was digging into it a little bit more. One of the things, I always like to jump in and look at the. I really should give them some money because I spend a lot of time in Wikipedia. You saw that little pop up looking for money, but so I always look on here at the population data, and this threw me for a loop. They were shrinking, 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 and then bam, 133%. Where did that growth come from? Well, if you look at this note, in 2003, Louisville merged with Jefferson County, and so they started counting their population together. Okay, so but then from that point, and from then into 2020, there was some growth, but then we have this small decline since 2022. I couldn't find anything that really talked about why that was, and so I was looking a little bit more. I pulled up the Jefferson County numbers because this is uh, what they merged with, and they had been growing. They had a couple of down years in the 80s and 90s, but they were growing, and they're growing again and growing again. But then again, they're showing this decline. What's really strange, even though they allegedly merged, these numbers don't match up with these ones. And so I'd have to go to the source material and really figure out what was going on there. But they both agreed that they're gonna, there was a decline in that year, and they're both 1.4%, even though those numbers don't match. So I don't really know what's going on there. if I were going to put a whole bunch of money in this market, I definitely want to find that out, and I'll also want to know, where's this negative growth coming from, or why is it shrinking, right? I don't know why I say negative growth. And I also look at the MSA, which is 43rd largest MSA, so decent size. And so I was just looking at that data, and it has grown for a very long time. And so I think, what was happening is people just moving out of the city of Louisville and into the suburbs, which has happened in a lot of places in the country. And, where the market as a whole has been growing, and, it covers a pretty big area though. But I thought that's a good sign, although it's not great if we're in the city, that the city had been shrinking and only started growing when you compare, when it's the city and the county together. Um, but especially because of the housing price trend in that zip code, this is not the end of the world for me. If everything else were perfect, I'd probably jump on it. I mean, the negative growth over that 3-year period is a little bit scary. Um, but it is, it's tough in the shorter periods of time and how they come up with those estimates, to put a lot of faith in it when it's not the full census being done, right? Those are just census estimates. But so there's a couple other things that I looked at. I looked at, rentometer as usual. Our rents are, let's see, significantly, or 1231 a month. So they're lower than even the 25th percentile. So that's not great. But when I was looking at it in the picture, it doesn't, it looks like this is one, this red one is significantly higher. So part of it, I think, is it's a small home. Um, it's a 3-bedroom, 1 bath, but it's only 851 square feet. So I'd expect, so that made some sense. Um, but in this map, I could already see, oh wait, but it's right by a river. And, we always check the floodplains, and that was my next step. This is one thing I wanted to show you. I see people do this when I'm training agents on checking do this all the time. Click on the floodplain data and look, oh, no floodplain, right? It's fantastic. But it's just that the FEMA site loads slow sometimes. So sometimes they'll click on there, see nothing, click away. Like, I think that's a really easy thing to do. And so I just wanted to give you that warning, because when I first clicked on this today, it loaded really slow. I probably waited 3 minutes before it showed the flood zone. And so you can see this is in this area. It is an X zone, and it's also an area with reduced flood risk due to the levee. I think this area, I know, don't quote me on this, but I think that X is really just means up to, I don't remember the percent risk, but this is not. So I'm always trying to be completely outside of flood zones, and so this, I'm trying to avoid this. Uh, I didn't notice anything when I was reading about any flood insurance on the property. There's no mortgage, so they're probably not. There's nobody requiring them to have it. But so this, for me, makes this property a no-go. But I wanted to show you one other thing, that even if you're comfortable with the flood zone, one other thing that I came across that also, if I was going to hold this long term, uh, and it was a growing market, and I was happy with the projected annual yield, although obviously it's not hitting this, and it hasn't for a while because there have been just a lot of repairs. When you read through the notes, it's always the tenant talking about this is broken and that is broken, and it seems like, some of the things are real things that need to be broken, and some of the things or need to be fixed, and some of it though really just comes down to them nitpicking the property, and it is it's not going to be perfect, like chipping paint on the deck and stuff like that. You know, I have that kind of stuff in my own home, right? Like, I mean, it's not going to look pristine all the time. And so, some of this stuff, I think maybe there's a little bit more of that repair and maintenance going on that needs to be, but then there were also some serious issues that needed to be addressed, so leaking pipes, broken doors, those sorts of things. So that all I think is perfectly fine, but it is, it's really eaten at the cash flow, and that's why there's no rental yield, because right now it's replenishing. Let's see, we always show you that, this is they had a good, so the operating reserve was down, they filled it up, and then, oh, right after they filled it up, it went down again, right? So this is the story of a lot of these properties. When you have a relatively low rent and even though there's no mortgage whatsoever, the repairs and maintenance can eat up a ton of your cash flow. And that's just what's going on here. Older property. Do we have an age on it? Do they give us that somewhere? I feel like I saw it because I'm calling it an older property. Did I just look at it on Realtor? Probably looked at. Yeah, built in 1961. I think more than anything, I was judging just by the age and from some of the repairs that they were talking about. Oh, but the last thing that I wanted to mention is, even though it's a discounted token, they've already had a recent vote to sell the property. Um, because it just has, somebody who owned it, it wants to sell it, it's not performing well, and somebody else, put up a counter proposal and is like, oh, well, no, this is a long-term investment. We've only owned it 2 years. The repairs and maintenance, those are long-term investments in the property. And I think that it's, to a certain extent, they're not wrong, but some of the stuff is stuff that's just going to keep coming up over and over again. And so, but what bothered me about this is how strongly they voted against selling it. 84% of the total votes said don't sell, even though, their token price has plummeted. And I think that they could get, a significantly higher price than what their tokens were. And it was already pretty low when they made that vote. And then one of the things, you're just trapped by other owners, right? And so if you bought this and I like the ones that have been really struggling for a longer time, because it seems like there's more owners that are willing to sell. And I think and there's probably more owners that bought it at the low price, if it's been a lower price for a longer period of time, than there are when they've had that low price just for, this is just since the beginning of the year, really. I mean, they had this, a pretty big dip for a short dip, and then it came back up. But so it hasn't been that long. And so I think there's probably a lot of owners that are like, oh, my token price will come back. It'll start cash flowing again soon. And maybe it will. I mean, the operating reserve is significantly, it's even though this says 6.7 months, it really looks like it's only 3 or 4 months away from cash flowing, provided there's not any more problems. But so it would cash flow, but with a little bit lower yield. But I just don't see it, even if you turn around and I just don't see being able to sell it. And so you're not going to get that really nice pop, which is what I'm expecting in a lot of the properties that I've showed you. And it's also not one that I want to buy for a long-term investment, even though I am intrigued by the market. But the flood zone for me is a real big, no. And then the negative growth for those couple of years, I'd want to really figure out what's going on there. If everything else had been perfect, I wouldn't have let that stop me. But the flood zone, and and then it does just seem like they do have quite a bit of stuff. And then, one other thing I wanted to point out, and then I think that's really it for today, is one of the things that I like to see is what they, when they had a big repair, because they had this big one, where they replaced a section of the cast iron pipe. And this was, they had the option to do one that was 6,200 and one that was 3,800, and they ended up doing the cheaper repair. And I think, in the context of what they were doing, it strikes me as being a sort of a short-sighted move, if you were going to hold this for a very long time. And so if we were just trying to do this fix and then a couple of years from now we're going to sell it, or we really thought we were going to sell it sometime soon, I think it would make, it would have made sense to do that. But if you have a bunch of owners, which it seems like you do, that just think that we're going to own this thing forever, I want to do the more comprehensive fix. I don't see why we don't do that. Um, and it is, it was a significant amount more money, but it's, if for the properties that I own and that I've, when I try to fix something, if I'm given, I'm not always just trying to do the cheapest repair. I mean, they even, the PM, the property manager even, said something about like, um, their current priority is just to address the immediate needs, and so we're just going to do the cheaper one. I don't know. It seemed a little short-sighted to me. I don't know. Maybe they had a little bit more info than I did, um, just from reading it. But anytime that I've done a repair like this, especially when I've had the old cast iron piping, I've wanted to replace as much of it as possible, not just fix the leak and move on, especially when the prices are just not that different. Um, so that's the last thing, right? It's too many problems for me. So this isn't one that I'm going to buy. Just like always, though, I want to remind you, just because I choose not to buy some of these or not to, it doesn't mean it's the right move for you. You want to do. I'm just trying to show you the thought process I'm going through and the due diligence I'm doing, and showing you what I think makes sense for a prudent investor. But it's, you might want to do more or different due diligence depending on what your risk profile is. Um, you know, like I said, I'm still really experimenting with this platform and several others that I've been talking about on my channel. It's only been 4 months that I've been on Lofty, despite being in real estate for the last 20 years. I think that, there's stuff to learn about the platform as well. And so, and I'm mostly new markets for me too. I've visited this one a few times, but it's not this property, but this market. But it's not, certainly one that I'm not an expert in. And so it's, I think that digging further into what's going on with the population makes sense. Maybe trying to spend a little time in understanding the flood zone risk a little bit better. I don't know that I've ever really encountered this, area where it was reduced because of the levee. I feel like I should have. Um, actually started, the first, my first entrance into real estate was in Baton Rouge, and we had levees there, and but I don't remember ever coming across this, and honestly, I might not have known enough to even be looking at flood maps at the time, and I know that well, I don't know this for sure, but I doubt they were even online or easily accessible at the time either. So, because that was a long time ago, because I'm an old person. But anyway, I just want to point those things out. I'm going to keep putting out videos on and analyzing some of these properties, and then other sites as they come up. As far as like, I want to share another mogul property, but I'm waiting for them to do the analysis on that rent by the room one. I've been doing the updates on ground floor, but if there are other online sites you think I should be investing in real estate on, and it's not one that I've looked at and just said, oh, that one's not for me. Or even if you think I should take a look at take a second look at some of those, if you think there's something I missed on Arc 7 or Arrived, or I'm pretty sure I'm never going to put money back in Landa unless things change a lot there. But yeah, I'd be interested to hear it. Oh, as usual, I always forget to say like and subscribe until this point in the video. And also, if you're new to the channel and you're new to Lofty or Ground Floor or Mogul, check out the links in the description below. If you haven't signed up on any of those sites before, there's, you can get some free money by doing so. Some of them you have to make an investment. I think maybe all of them now you have to make an investment. So the terms have changed. Um, they don't stay the same, and so what free money they'll give you varies. I've noticed Mogul's been really interesting because they're always trying to give you free money for making another investment. It worries me a little bit, but I think it's just because they're really new and that, it's cheaper to do that than to spend a bunch of money marketing. In any case, that's everything for today. Until next time, I'm going to keep making mistakes so that you don't have to.